Welcome back to a new deep dive.
Glad to be here.
So, our mission today is to cut through some truly mind-boggling numbers. We are looking at Alphabet's second quarter 2026 earnings report. That's the quarter ending June 30th, 2026.
Right.
And we really need to understand the underlying health of one of the world's biggest tech companies here. We're going to be separating the real, actual operational wins from some, frankly, massive accounting quirks.
Yeah, you really have to, because if you just skim the headlines on this Q2 report, you are getting a highly distorted version of reality.
You really are. I mean, the top-line revenue headline is undeniable. Alphabet achieved its 12th consecutive quarter of double-digit revenue growth.
It's just a monster number.
It is. They're up 24% year over year to $119.8 billion.
Which is wild. Pullman nearly $120 billion in a single 3-month period.
Right, and maintaining 24% growth at a $100 billion scale. It's like, I don't know, trying to accelerate a freight train that's already moving at top speed up a mountain.
That's a good way to put it. The sheer momentum required is incredible.
Exactly. But before we explore the products driving that revenue, we really have to address the elephant in the room, the net income figure.
Oh, yeah. The headline-grabbing net income jump. It rocketed up 298% to $112.1 billion.
298%.
Yeah, and the earnings per share, or EPS, jumped 294% to $9.11.
So to anyone casually watching, this looks like Alphabet just invented a machine that prints pure gold.
Right. It looks like a miracle.
But diving into the source material, this is it's more like finding a winning lottery ticket stuffed down in your couch cushions on the exact same day you happen to get a massive raise at work.
That is the perfect analogy.
Yeah.
And they both hit your bank account at the exact same time.
Right. So help us separate the lottery ticket from the raise here.
Sure. So let's look at the lottery ticket first. It all comes down to a specific accounting nuance. In the report, there's a single line item labeled Other Income.
Okay.
And Alphabet recorded a staggering net gain of $98 billion in that one category.
$98 billion just in other income.
Exactly. And the report explicitly states this is primarily from unrealized gains on equity securities.
Okay. Unrealized being the key word there.
Yes. This isn't cash from selling products or even selling stocks. When Alphabet invests its massive cash pile into other companies, accounting rules dictate they have to report the changing value of those investments on their income statement.
Even if they didn't sell them.
Right. It's known as mark-to-market accounting. So if the broader stock market goes on a massive tear, which it did, those investments skyrocket in value.
So Alphabet just has to record that increases income for the quarter.
Exactly. It's a paper game. But it alone added $77.1 billion to their net income.
Wow.
And translated to the stock level, it added $6.26 to their EPS.
Wait, let me do the math on that. If their total EPS was $9.11 and the paper gain was $6.26,
Yeah.
over 2/3 of their reported profit is just an illusion of the stock market.
Right. It has nothing to do with their actual business of selling ads or cloud computing.
A bad week in the market could vaporize all of that.
Exactly. Which is why we have to look past the mirage. To see the raise, the true operational health of the business, we look at operating income.
The actual real-world profit.
Right. And operating income increased by a very healthy 30% to $40.77 billion.
30% is still phenomenal.
It is. And their operating margins actually expanded to 34%.
So they're keeping 34 cents in operational profit for every dollar that comes through the door.
Exactly. It's a remarkably healthy core business.
Okay, so now that we understand the true 30% growth, what specific parts of Alphabet's empire are driving that real-world profit?
Well, we have to start with the bedrock of the company, Google services.
All right, the stuff we all use every day.
Exactly. Revenue there hit $94.5 billion, which is up 15%.
And diving into those key drivers, search is up 17% to $63.2 billion.
Yep, still the undisputed king.
And YouTube ads are up 13% to $11 billion.
But the stat that completely halted my reading was buried in those YouTube numbers.
A World Cup stat.
Yes, over 1.7 billion unique viewers watched FIFA World Cup 2026 content on YouTube.
It's just hard to even process that number.
1.7 billion individuals. That is roughly a fifth of the human population tuning into a single platform. The infrastructure required to serve that much high-definition video without the platform just melting down is incredible.
It really is. YouTube essentially becomes the default broadcast network for the planet during those events.
But as massive as Google Services is, it wasn't the biggest operational shift in the report, was it?
No, not at all. The breakout star of this entire report is Google Cloud. The numbers here are they're aggressive. Cloud revenues didn't just grow. They accelerated massively by 82% to $24.7 billion.
An 82% acceleration at that scale is almost unheard of.
And their operating income for cloud completely tripled, right? From
So-
$2.8 billion to $8.8 billion.
Yes. And if you look at CEO Sundar Pichai's commentary, the why behind this explosion is crystal clear.
It's all AI.
Entirely.
Yeah.
It is driven by massive enterprise demand for AI infrastructure and solutions. The scale is staggering. Gemini Enterprise is now used by nearly 90% of the Fortune 100.
90%.
Almost every major corporation. And on the consumer side, the Gemini app has 950 million monthly active users.
Nearly 1 billion people using a generative AI assistant every month. But the metric that really blew my mind was the API token.
Oh, there's 22 billion API tokens per minute.
Yes, let's pause on that because it's so important. The models are processing 22 billion API tokens per minute.
It really is the digital heartbeat of the AI economy right now.
Right, because generating a token is fundamentally different from a traditional Google search.
It's a completely different computational paradigm. A search is basically retrieving information from an index.
Like a librarian fetching a book.
Exactly. But generating an AI token means actively calculating massive probabilities in real time. The computational intensity is astronomically higher.
Which means those 22 billion tokens a minute represent servers just running at redline.
Pulling immense amounts of electricity, generating heat.
Alphabet is basically renting out supercomputers by the millisecond at this point.
They really are. They even highlighted a new security solution they launched, Gemini 3.5 Flash Cyber, which caters to that need for highly efficient AI performance.
But, processing 22 billion tokens a minute and supporting the Fortune 100 doesn't come cheap.
No, the physical reality is brutal.
Which brings us to what I think are the most shocking numbers in this whole deep dive, hidden in the cash flow statement.
The true cost of the AI era.
Exactly. It's a fascinating paradox. Alphabet generated $39 billion in operating cash flow in Q2.
A massive amount of cash.
But their free cash flow was actually negative $5.8 billion.
Which is an absolute seismic event for a company that normally prints cash.
It really is. It's like a wildly successful local restaurant that makes millions in profit every month.
Right.
But the owner takes every single penny, plus some extra money from the bank, and spends it all to buy up the entire city block for a mega expansion.
That's exactly it.
Yeah.
On paper, they have less cash at the end of the month, but it's because they reinvested everything.
So where exactly is all this cash going?
It's going into physical infrastructure.
Okay.
The line item is purchases of property and equipment, or CapEx.
And the number is astronomical.
It hit $44.9 billion in Q2 alone.
$45 billion in 3 months.
And that is up from $22.4 billion the prior year. They literally doubled their physical spending.
So they aren't buying, nicer ergonomic chairs for the office.
No, this is the physical cost of the AI arms race. They are building out massive data centers, buying expensive GPUs, and building advanced liquid cooling systems.
Because those chips run so hot.
Exactly. And securing the immense global compute infrastructure and energy contracts required to power it all.
And it doesn't stop at the hardware. I saw that Alphabet-level activities, which are basically unallocated costs for shared AI R&D saw operative losses, grow to $5.7 billion.
Right, that's the human and theoretical cost.
I
The
get it.
researchers pushing the boundaries of what the AI can actually do.
But this creates a really interesting puzzle. Alphabet has a massive war chest, right? $242 billion in cash and marketable securities.
They do.
But instead of just draining that savings account to fund this CapEx explosion, they went to the markets to raise fresh capital.
Yeah, they pulled several levers to get cash without draining their reserves.
Why do that if you have $240 billion in the bank?
Well, a lot of that money is tied up in marketable securities generating yield. Selling it off could trigger massive tax liabilities. Plus, they want to keep a liquid buffer for emergencies or big acquisitions.
Right.
So in Q2, they raised nearly $49.6 billion in equity.
Just selling new shares to the public.
Exactly. And they explicitly noted it was to scale AI infrastructure. They also issued $20.3 billion in senior unsecured notes.
Which is basically corporate debt.
Right. Investors loan the money.
There was also a note about a $40 billion ATM program.
Yes, an at-the-market program. Though the report clarifies that specific program was set up primarily for employee tax obligations, not the infrastructure build.
Okay, got it. But still, between the equity and the debt, they raised roughly $70 billion in fresh capital in a single quarter.
Just staggering.
Alphabet isn't just updating some software code here. They are undertaking one of the largest physical infrastructure build-outs in corporate history.
They absolutely are. It's a full-on physical transformation.
So to recap all of this for you listening, Alphabet's Q2 2026 is basically the story of a massive 24% revenue surge.
Right.
But it's masked by a $98 billion equity illusion in their net income.
Yes, that lottery ticket we talked about.
Exactly. But underneath that illusion, it's fundamentally driven by an 82% AI-fueled explosion in Google Cloud.
Which is demanding a historic physical build-out to sustain. Alphabet calls it their full-stack approach to AI.
Which leads to a final thought we want to leave you with today. We've spent this whole deep dive looking at the staggering cost of building this infrastructure.
Right, the $45 billion a quarter on CapEx, the raising of $70 billion in debt and equity.
But the question for you to explore on your own is, what happens when the concrete is poured?
Exactly. Once this historic global AI infrastructure is fully built and paid for, what entirely new, unimaginable business models will a company like Alphabet unleash on the world?
When you own the absolute physical bedrock of global cognition, you aren't just going to serve the exact same menu.
Not at all. The scale of the investment guarantees their future ambition is something we haven't even fully grasped yet.
It's going to be wild to watch. Thank you so much for joining us on this deep dive. We hope this helped you cut through the noise and see the real engine driving these numbers. Keep questioning the headlines, and we'll see you on the next one.